What's good, y'all? What's good, y'all? Okay, unfortunately, I can't see my face, but hopefully, y'all can. Um, let's get into our first YouTube video, man. So, look, I'm gonna teach y'all a little bit of basics, right? So, we'll start with my trading strategy, okay? So, assuming you already know a little bit about trading, we'll jump into it, and then as we go on, then we'll see what you know. Hopefully, you know a little bit about trading. So step number one, right? So we have previous sessions outcome more than likely equals or yeah, like equals or is shows the next session's outcome, right? And what that means is if you go over here, let's go to baby pips, right? Click the first link, tools, scroll down, you want to find forex market hours. Give it a try. Right, you come over here, you choose your time zone right here. I'm Chicago Central Time, so mine's that. And as you can see, the market's closed right now. Right, the market is closed, and you can use this to kind of help you. Like, okay, so London, or not London, Asia sessions starts at 7 p.m. and runs until about 4 a.m. Right, and it shows you when the market is most volatile and when there's like the most amount of traders. Right, so let's go ahead and mark out our hours on the trading view. Right, so we'll do Asia session 7 p.m. to we're gonna do 2 a.m. because that's when London session opens. Once London session opens, it takes over it, like the last bit of Asia sessions, right? So 7 p.m. to 2 a.m. Right, let's go ahead and mark those out. So 7 p.m. to 2 a.m. Tight shit. All right, look. So to 2 a.m. and then we have London session 2 a.m. to 7 a.m. Right? It's technically 11 a.m., but New York session opens at 7 a.m. Central Time. It takes over the market, right? So 7 a.m. So at 2 a.m., London session opens. 7 a.m. is when the Big Daddy. All right, so we'll mark this out. We'll make this orange. Right, we'll have orange for New York. Right, New York is 7 a.m. to about 4 p.m. Right now, the market's currently closed. It's 6:15. Was okay. This is paused. Okay, perfect. So we can mark out highs and lows. So we mark out session highs and lows. What that means is during a session, so Asia session, London session, New York session, we gotta mark the high and the low of that session, right? So from 7 p.m. to 2 a.m., what's the highest point in that session? It's gonna be right here. Sorry, gonna be right here. Boom. That's Asia highs. We'll make it red, right? Asia lows is right here, right? Now we have London highs and lows, right? So highs, boom, right there. If I'm too close to the mic, let me know. I'm gonna back up. I feel like I am, right? Asia session lows, right? Boom, right there, right? So now we look. Let's look at my rule number one: previous session outcome equals next session's outcome, right? So let's pretend that it's 7 a.m., right? And we're looking at New York market. Now let's think, what did London session do it this morning? It consolidated. It stayed in this general area, right? You're probably thinking to yourself, what is consolidation? How do you know it's consolidation, right? So when price goes into a area where there's liquidity, right? Liquidity is where orders lies, and liquidity is where highs and lows are, right? So we'll get to that in a minute. Liquidity and liquidity sweeps in a minute. Right now, we know that this is consolidating, right? And we know that Asia session manipulated, right? It went down, right? It went down and manipulated these lows right here, right? This was at 8:45 p.m. That was yesterday's New York market. And there was actually news that day to cause it. Look at this craziness, bro. It went drastically up, drastically down, right? So during Asian sessions, it manipulated down, right, and swept liquidity of previous New York session lows. Sorry, had like brain fart right there. Okay, now let's go back to consolidation. You're probably thinking, how do you know London session consolidated, right? Did it touch the highs or the lows of that session, of the previous session? No, it stayed inside the highs and lows. Therefore, it consolidated, right? And that leads us to our next point. So when I say previous session outcome equals next session's outcome, there's three different outcomes that can happen, right? So the first one being previous, we're going to write this down, session consolidation, right, equals next sessions, oh, I can't see that, sessions manipulation plus reversal. Right? So what does that mean? So we already know what consolidation means. When price stays in a general, in like a general area between two highs and lows, or just two price zones, right? Right. So consolidation. Then what does next session manipulation reversal mean? So manipulation, we kind of already touched on that, where we said Asia session manipulated and swept lows, right? So if we look over here in New York session, 7 a.m. to 4 p.m. I know it says 5 right here on the bottom, but it goes 3:45 to 5. Don't know why, but so to 4 p.m. right? And we look what happened here. New York went down, swept these lows on previous session, London session, right? And it looked like it almost touched here. Well, I don't know what bro, get out of here. Sorry, that distracted me. And we can say it did sweep previous session lows, London session lows, right? That's a manipulation when price goes down to a low or up to a high where there is liquidity, okay? And then a reversal, so it reverses, goes up. There's a lot of examples of that on the Nasdaq. The past couple days, I've done trades, and mostly every day it's been previous session consolidation, next session manipulation plus reversal, right? We can show you, I'm gonna show you examples of that in a minute. So typically it doesn't go up and down like this. It was supposed to just go up. There might have been news today. Let's check. So if you want to go to Forex Factory, that's a good news website where it tells you upcoming news, right? Well, look, there's yellow folders. Those are like so news, not a big thing to worry about. And there's orange folders. Those are like medium. There's red folders too. Let me see if I can find one. Look, a red folder right here. When it's red folders, it's big news, right? So you want to click this little folder on the side and you want to read it. So Statistics Canada, change in the inflation adjustment value of all goods and services produced by the economy, right? This is affecting the Canadian not stock market, just Canada currency. We don't gotta worry about that too much. But see, this is like into next week. So today would be right here for me. There was no big news impact day, which is surprising. Okay, so that's one of the lessons of the, I guess, the first rule, right? There's two more, right? Next one, two. It's previous session manipulation, next session's reversal. Just confirming. Okay. So previous session manipulation, next session reversal. So what that means, when a session manipulates, right, the next session will more than likely reverse, right? So let's look for an example. Okay, so we have, this is New York session, right? It's 7 a.m. to about 4 p.m. Manipulation just went up, right? Next session reversal, right? So yeah, that's it. Manipulation, it goes up, it swept. It's like these highs. These like little highs right here. This is probably like a fair value gap right there. They kept pushing down. Right, that's the best example I can find right now. I wish I could find a better one. But let's go back to the chart over here. Right, so write that down in your notes. Previous session manipulation, next session reversal. Okay. Last but not least, we have previous sessions consolidation plus reversal is next session's manipulation, right? Previous session's consolidation plus reversal, next session manipulation. And what that means is when a session manipulates and reverses, the next session will consolidate, not hit the highs or lows of the previous session, right? So right here we have New York high, New York low, right? We'll make them blue. I'll go ahead and delete this one, and this one, and this one, and this one, right? So my assumption, when the Asia session opens, it's going to stay in this general area and be consolidation, right? Yeah. So for the most part, this is how that rule works, and let's show you. I'm gonna show you some more examples, right? So let's go to any random day this past week. 7 a.m. Let's find 7 a.m. 7 a.m. Oh, let's find a Tuesday. 2 a.m. to 4. Right, and look at this. What do we see here? Write in the comments down below. What do we see here? Right. I want you to guess. What is this? Okay, so 2 a.m. This is to 2 a.m. to 7 a.m. What is this? London session. What is this right here? Consolidation. 7 a.m. to 4 p.m. Manipulation, reversal. Right? So this is a great example of another previous session consolidation, next session manipulation plus reversal. Oh my god, I'm stumbling on my words. I'm sorry. Right, let's find the next day. 2 a.m. 2 a.m. Let's find a 7 ski, 7, all the way to 4. Right? What do we see here? First, what do we do? I didn't tell you. I should have told you. Mark out previous session highs and lows. All right, and then now we see what did price do? It swept lows, touched highs, reversal. You're probably thinking that's not a manipulation reversal. Don't know what that is. Well, let me explain this to you that not many traders know about, that you should know about, right? So whenever New York session opens at 7 a.m., there's something called a pre-market, right? So from 7 a.m. to 8:30 a.m. and if you're not Central Time, when I'm saying all these numbers, I'm sorry, I'm confusing the fuck out of you. I already know, but for the sake of like keeping it simple, I'm just gonna say Central Time, right? So if you're Pacific Time, the West, then you're gonna be an hour back, so you'd be 6 a.m. And if you're Eastern Time, then you'll be an hour ahead, 8 a.m. Anyways, so from 7 a.m. to 4 p.m. 7 a.m. to 8:30 a.m. It's called New York pre-market. What is that, you ask? Okay, so New York pre-market is when the market's getting ready, doing its thing, and I'm gonna say that's when like you don't want to trade. That's when like the market kind of tricks you, right? So here we see pre-market, it did sweep London session lows, right? But we're not gonna trade based off of that, because look, if London session lows came, swept, went up, right? Now you're thinking like, oh, manipulation reversal, buy. Don't want to buy, bro. Not during pre-market, right? What actually happened when at 8:30, when London session is fully go ready and active, manipulation swept liquidity to previous session highs, London session highs, then went back down, reversal. Okay, that's huge in trading, right? You do not want to trade or base your trades off of pre-market, right? The first hour and a half when New York session opens, right? We can actually see that example in the current trade right here, right? So let's mark out 8:30, right? So we see let me mark out the highs and lows. Highs, lows, right? During pre-market, New York swept lows of New York, right? Then during New York session, it swept highs, right? Reversal, right? So you got to be very careful when you trade. You don't want to trade pre-market. Okay, so that's step one of the strategy. Okay, next, step two. We're going to look for confluences. What is a confluence, you guys? Good question. I don't know. Nah, I'm joking. Okay, so a confluence. Confluence would be a break of structure. Fair value gap getting hit or being respected as well. And we can do, what I like to do is correct trend patterns, right? We'll get into that in a minute. Break of structure. What is a break of structure, you ask? Well, we got to get down to the simple stuff, right? So let me go ahead and delete this so it's not a whole bunch of lines and you're confused what the hell I'm doing. Okay, so we have to identify what is the trend, right? What are trends? Okay, let's look. Let me go over here. What is a trend? A trend is this simple, right? We have a high, then a low, a high, then a low, high, low. We have a high right here and a low. A lower high, lower low, lower high, lower low. This is called a downtrend, right? It's going down, right? The opposite is a low, high, low, high, low, high. We have a low right here, higher low, higher low. We have a high right here, higher high, higher high, right? So what is break of structure, you ask? Let's say we're in a trend, a downtrend, right? We have a low, high, low, high, low, high, lower highs, lower lows, and then price jumps up and closes, makes a new high above the previous high, right? So whenever price goes above the previous high and closes that way, it creates a break of structure, right? Then it'll reverse the trend, right? So break of structure, that's what we gotta look out for in case, okay, if it's in a downtrend, it might go up. If it's in an uptrend, it might go down. I'm gonna show you the other way, right? If it's an uptrend, boom, higher highs, higher lows, then price cuts down below this low, breaks it, keeps on pushing, right? Break of structure. We can see that right here. Downtrend, 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 right? We have a high, a low. Then we have a lower high, it's a lower low. Sorry, this is in the way. Then we bump up, higher high, broke structure. Then we have higher low. We're in an uptrend, right? Little do we know, not little do we know, because we know what trading is. We know what liquidity sweeps are. We know previous session highs, right? We have a liquidity sweep, previous session highs, right? So we're smart and we know that this is a liquidity grab. And usually when price snags liquidity, right, it can do one of two things. Use it to bounce off and go back down, or it keeps on going to the next liquidity grab, right? And it already swept London session highs. Then it went to go to it swept previous session highs, London session highs, and then it swept it right here, went down, psyched us out, said nope, I'm gonna go up one more, then it reversed, right? So luckily we know what break structure is, we know liquidity grabs, right? So this is an uptrend now, right? We have a low, lower low, a low, high, low, higher high, higher low, high, higher low. What happened? Lower high. Now that didn't break structure, right? Just because it didn't form a higher high, didn't break structure. What broke the structure was when this candlestick closed. Let me move this. Closed under this low. This is what broke the structure. Okay, now we're like, oh, trend reversal, right? Then it went down. Okay, next we showed you. I showed you what breaker structure was. A fair value gap. You're probably thinking, what is a fair value gap, right? So a fair value gap works similar to liquidity, where price will come down in that general area and do one of two things: use it to grab, um, to fill orders and bounce and go the opposite direction, or it'll go past it into the next fair value gap, right? So this rule, same definition, not definition, but same like concept applies for both liquidity and fair value gaps, right? A fair value gap is going to be a 3 candle pattern, right? Not just any 3 candles though. Specific. I'm going to go ahead and show you, right? These 3 candles create a fair value gap, right? I'll show you what it looks like, right? So we have candle number 1, 2, and 3, right? We have the first candle's wick and the third candle's wick, right? So the third candle bottom wick, sorry, the first candle bottom wick, third candle top wick, it creates a gap, right? Pull it all the way out, we can see. Sorry. Look, what did price do? Price came up into the fair value gap and went back down using the bounce off. That's called respecting the fair value gap. Okay. Now there's something called an inverse fair value gap, which everybody has, not everybody, but people have different definitions for inverse fair value gap, right? So if you say what's a fair value gap, they're gonna say, oh yeah, it's whenever it's a bullish fair value gap. A bullish means the green candles, goes up, right? So you say fair value gap, this is what people think, right? Now, an inverse fair value gap, depending who you ask, they'll say, oh, an inverse fair value gap is just the opposite direction. So it's the bearish version of a fair value gap. I mean, really, fair value gap can be either or, but they like calling that inverse fair value gap. Okay, cool, right? But my definition of inverse fair value gap is different. When I say fair value gap, I mean one of these two, right? But when I say inverse fair value gap, I mean when a fair value gap gets disrespected, right? So we have this fair value gap right here, and now look, price came in, closed below it, kept going down. So this fair value gap was invalidated. It was disrespected. It was not used to bounce off and go the opposite direction, right? Instead, what price did was, I can't even say it came into this fair value gap because it didn't. This one got disrespected too, as you can see. I mean, it was good because the price kind of like just stopped right there, but then just got disrespected like within the next couple minutes, right? So that's disrespected fair value gap. That fair value gap is you can't use it as a fair value gap anymore, right? So that's what a fair value gap is. I showed you also inverse, but fair value gap. Now correct trend patterns. What does that mean? So correct trend patterns is you want to look for, let me just get these out the way. Okay, correct trend patterns. You want to look for a trend, and you want to look for where does liquidity lie and what could it possibly do, right? So correct trend pattern. Let's go down to 5 minutes. A correct trend pattern is when a trend is following what it's supposed to do, it's doing what it's supposed to do. We see we have a downtrend right here, right? High, low, lower high, lower low, lower high, lower low, all the way down. The trend is following what it's supposed to do. And correct trend pattern, right? So we're like, okay, the trend is following suit, nothing out of the blue. Then we see this jump, right? We see this high, right? Oh, didn't take out this high quite yet. Almost did though. Yeah, what's up?
Yo, can I come in?
I'm about to leave.
Yo, can I come in?
Okay.
Good boy.
Okay, now leave.
Wait, what?
What's up though? What you need?
I just wanted to see what's up and what you're doing.
Oh no, I'm just teaching people how to trade.
YouTube?
Yeah.
Not bad.
You good? I'm about to go to the gym. I'm about to leave.
Alright.
Okay.
I know.
How you know?
Huh?
How you know?
So mom told me.
Oh, okay.
Yeah, just so you know.
Okay. Okay. Anyways, so it didn't quite break structure because look, this high is right here, and this high didn't break it, right? So this could technically be a lower high, right? This can trick you, right? And you can see the candle went down, right? Now we see a high, low, lower high. Okay, let me just. Okay, now we see this high, this low, lower high, a higher low. How do we have a lower high but a higher low? That's consolidation, right? It's staying between this high and this low. Now we're thinking, okay, wait, this could be a support and resistance zone. Support and resistance, right? That's something not a lot of people use or know about. And so let me explain it, right? So price came right here, right? Hold on. So price came right here, right? Bounced off there, went down. Boom. Bounced off here, went up. Bounced off this same general area, went down, right? So price is making this shape, right? So that's called support and resistance, right? So we have this ginormous, I'll just do this, this ginormous resistance zone. Price doesn't want to go up. We have this support zone. Price goes up, right? So yes, price did kind of come up out here, but next candlestick shot it down, right? Now price broke through. When price breaks through a support or resistance zone, it's gonna retrace back 9 times out of 10. What is a retracement, you ask? So a retracement is when price breaks out of a zone, comes back to the zone, and then just follow suit, keep on pushing down, right? Now this support zone that helped price go up turns into a resistance zone that helps price go down, right? Now it already used the support zone or the resistance zone once. Could do it again, but if it breaks these highs, it could keep on going. All right, so I kind of gave you a little extra information right there with the support and resistance zone, right? So correct trend patterns, and we can also put support and resistance zones. Okay, 3, right? Number 3. Oh, I gotta go. Shit. Okay. Now 3. Once we marked out highs and lows, previous session highs and lows, and identified, okay, what did previous session do? Okay, this session may or may not do this, right? Now let's mark, we need confluences. Is there a breaker structure? Okay. Is there a fair value gap? Now, there doesn't have to be all 4. There could be 1. There could be 2, 3, or all 4. You don't wait till all 4 happens, because it might not happen, right? If you need at least like 1 or 2. You'll be fine, right? Now, we need confirmation, confluence, right? So after one of them happens, so a break of structure happens, we think, okay, now is the trend gonna follow suit? Is there gonna be a correct trend pattern, right? Come over here. We see break of structure, another break of structure. Is the trend gonna follow suit? After price broke this, right, made a higher high, came back down, made a lower low, consolidation right here. Okay, let's mark that. We have support, all right, resistance, support. Okay, so after a broke structure, we're thinking it's not following suit, but I noticed support and resistance, so we can use that. It broke structure, didn't follow suit. Let's find another confluence. Support and resistance, right? And look, it broke through. Oh my days, it broke through, right? Don't get your hopes up, because look, it came back down to retrace. It didn't hit the zone. It's fine though, because it still came back down for the retracement, then busted its buns back up. You know what I'm saying? Like going back to your shorty just to hit and then dipping. You know what I'm saying? All right. So confluence, right? Went back up. We bumping, you know what I'm saying? So we have support and resistance. And once you see a support and resistance, sorry, this is resistance, this is support, you can think in your head, let me look up chart patterns, right? Go to images. What does this look like to you? Let's think. So price, it's coming down, bumping. Okay. So it's coming down and bumping, right? What is this? Coming down and bumping. You know what I'm saying? Yes, sir. Okay. So coming down and bumping. Coming down, bumping. Oh my gosh. Breakthrough. Let's look. It broke through. This one doesn't show you it coming back for retracement. Trust me, it does. You can see right here. Comes back down, retracement. We bumping. You know what I'm saying? Right? So now price came back up. Right? But as you gotta track your trades though. Your trades though. You can't just be like, oh, it's going up, buy, chill. No, you gotta follow it. You gotta chase it. You gotta. I mean, depending what kind of trading you're doing, right? But you gotta keep track of it, right? So it came back down here, up, right? Now we have a trend coming on. Low, high, low, high, lower low. Oh no, broke structure. Now we're in a downtrend, baby. All right. Now it kind of did consolidate right here as well as right here, but it broke structure. It's not going up after this. It breaks structure. It's more than likely not going to go up. Just sell at that point, boy. Okay, just sell. Get your take profits. If you bought whenever it was bumping right here, retracement, just tap out right there, bro. It's okay. Take a little win, right? So that's. Oh, that was the second one. Confirmation, right? That's what we're doing. Confirmation, confluence, right? So you want to find after it hits break of structure or fair value gap or whatever, you're gonna look for retracement, right? Retracement, right? Really did support and resistance zones did support. Did I really spell with the Z? Resistance zones. No, wait. Scratch that. Was there a breakthrough in support and resistance zones? I'm sorry. I'm just making you erase your notes, and you're probably mad at me. It's gonna happen a lot. Okay, just keep that in mind. It's gonna happen a lot. Right? Confirmation, confluence, retracement. Was there a breakthrough in support and resistance? Question mark. If so, find chart pattern on Google and find the. Wait, honestly, you don't even need to do that. Because whenever you do support and resistance, you gotta verify that. You gotta look, what is it? You gotta be like, find chart pattern on Google and see what it will do. All right. Chart pattern. Wait. Hello. Why is that bugging, bro? Boom. Boom. Okay. Was there a breakthrough in resistance zone? Question mark. If so, wait for retracement. Then push, or then buy. Right. Let's say there wasn't support and resistance, right? So we'll have a subgenre. We'll have 3B. So this is 3A. I'm sorry, I'm making you erase and rewrite. I apologize. Right, so 3A or 3B, right? Say there's no support and resistance. Now you're probably thinking like, what do I do? Right, so we can find a scenario when it's like a fair value gap getting hit or something else. Right, so we'll do. Okay, look. News on this day. You can trade with this. Big fucking fair value gap right here. So juicy. All right. So you have a big ass long fair value gap, right? So when it's big, it's better. So when it's big, it's more than likely not gonna get disrespected, right? Because bigger the better. You don't want to disrespect Big Poppy because he will do damage to you. So yeah, no, when it's big, it typically gets respected, right? As you can see, price came into here, bounced down, came in here, bounced down, came in here, bounced down, right? Fair value gap. Oh, what did that create? Support and resistance. So the support and resistance is just about anything, but let's just not think about support and resistance for a second, right? Let's just imagine there's no support and resistance. You see, like, this fair value gap is so ginormous, right? So after it hit the fair value gap, look how long and freaking it went down crazy, right? But you're probably thinking, how do I determine which like when to sell, right? If it keeps on going back up, well, you're in luck. I'm about to show you, right? So it's down here, coming up, hit right here. Now you're like, okay, it's going down. Look, broke structure, but it wasn't the body that broke structure. It was the wick. Therefore, that's not a break of structure. You're probably thinking, what does that mean? What is the body? What's the wick? So the body is the solid part of the candlestick, and we have this long. Oh, it's not long. It's like tiny little peedly little pecker right there. That's the wick, right? So when you have a low and only the wick breaks structure, it's not a break of structure, right? So you know that price, okay, it's probably not gonna go down, of course, but like, or it's not gonna go down in this scenario, right? But it could have gone down here or here, right? So after it hits up here, you have a high, low, low. Wait for that break of structure. Wait for that confirmation confluence, right? And then you can keep pushing, right? Because you're never gonna say it's in here, buy, and it just goes down in your favor. You're never gonna be able to do that. You have to wait for the confirmation, right? Like over here, a high, low, lower high. Oh, that might be a downtrend, right? You're gonna wait for it. This candlestick closed below this break of structure. That's when you would click buy. Instant money, instant cash. You know what I'm saying, right? So, how did that happen? Okay, 3B. Not supporting resistance. So so let's say it's fair value gap, right? Now you gotta wait for the confirmation confluence, right? What is a confirmation confluence? We already established we have a fair value gap being respected, then trend continuation, right? As well as break of structure following suit, right? It's very similar to the second one, right? So after fair value gap, you're gonna wait. Okay, confirmation confluence. I'm gonna wait for there to be a break of structure and then a trend continuation, right? I mean a trend continuation and then the break of structure, right? Right. If there's a break of structure, you're gonna wait for the trend continuation, and then you're gonna wait for it. Maybe it hits a fair value gap, maybe it swipes liquidity, right? So anytime you're trading, you want to target liquidity grabs, right? What are liquidity grabs? And I want to be able to just type right here. Liquidity grabs. They are previous session highs and lows. Just normal highs and lows, right? And then that's pretty much it, actually. Okay, so yeah, you mark out, your time zones, right? When you know what session, the sessions and whatnot, mark session highs and lows, and then you're like, oh, how do I know which high and low to mark out, right? So see this low right here. This low has a huge gap, right? There's orders that need to be filled here, right? So you just honestly, you don't want to be on the 5 minute when you mark it out. You want to go to 30 minute, 1 hour, or 4 hour, right? Typically 1 hour is best, right? 1 hour highs and lows, right? So we can write that liquidity grabs, previous session highs and lows, and 1 hour, sorry, 30 minute, 1 hour, or 4 hour highs and lows, right? So you're thinking, okay, high right here, low, um, that low, this high, this high. And you're probably thinking like, how do I know which high, which lows to mark out? Let me show you, right? So you want to find a high that has nothing in front of it, a low that has nothing in front of it, right? So the reason why I marked this one is because let's say like price was right here, right? There's nothing in front of this low, mark it out. Nothing in front of this high, mark it out, right? You wouldn't mark this out. No, I wouldn't mark this out. And you're probably thinking, well, there's nothing in front of it. Well, technically there is, right? This low swept this liquidity, right? So if we were like this, right? Price was right here. You can mark that out and target it, right? But just look, a low, nothing in front of it. Low, but this got targeted. But look, there's nothing in front of this one. You can mark it. Price came down, okay, unmark it. Price came down, got this, okay, unmark it. You know what I'm saying? You kind of get what I'm saying, right? So you just want to always have that in the back of your mind, right? So step one, previous session outcome is next session's outcome, right? Typically what I like to do before I even start looking at my strategy, I won, mark previous sessions. So when I say mark previous sessions, I mean go over here, find the vertical line, go 2 a.m. to 7 a.m. to, you know, so on and so forth. You just mark the sessions, right? Then mark sessions high and lows. Previous sessions, actually. Previous sessions high and lows. I'm sorry if you wrote that and you have to erase it. Oh my gosh. Okay. Then after you do that, you can do the strategy, right? Previous session, what did it do? Consolidation. Now our New York session, oh, it might more than likely will manipulate, draw liquidity from the highs or lows in the reverse, right? Then you can apply this. Okay. Always set your take profits and your stop losses. And yeah, that wraps up today's video. Okay, I hope you guys enjoy. Have a good one. Take care.